Hello guys, good good morning. Raymond, and I'm sorry for last night. There are some errors in our class last night, so I was unable to make some records, and I was unable to um, just take the class as the way it should be. So today I will try my possible best to explain what I explained yesterday, and even more in depth now, because I think I'll be chanced a lot to speak on a lot of things right now. Before I go into today's topic, I really want us to look at something that the assignment given to you guys and the errors that were made in those assignments and how to correct them, how to make corrections on them. A lot of you tried concerning the drawing of trend lines, but it wasn't perfect enough. It was not perfect enough. So I really think most common errors that you guys did was you guys forgot that we're actually dealing from the past to the future. Some people only just draw the trend line connecting two points together, which is not supposed to be so. But I mean something like this. When you're drawing a trend line, sorry, let me find something more suitable to use. Let me find so sorry. Okay, yeah, this was what I was using for explanation yesterday. I'm finding a new one. Okay. Yeah, this is very cool. Okay. Okay, good. Let me delete this. So this is a clean chart. And so this was the mistake some people were making in the assignments. This is a trend line. This is an uptrend. Automatically, I told you, you need to connect 2 points together. So you don't just connect 2 points together like this and stop, actually. You connect those points out, you draw them out. So let us see the reaction of price around this line later in the future. Maybe price is going to just come to this line, maybe bounce down and go up, or the price moves down. So you need to draw it into the future. You understand what I'm saying? So that's how to draw a correct trend line. And some people are still making the mistake of instead of them drawing a trend line like this, they went and do something. Instead of them drawing it like this, they did, and drawing it to the future like this. They did something like this. They did something like this. Okay, sorry. They did something like this. This is absolutely wrong. Very, very wrong. You don't draw a trend line like that. Sorry. You don't draw a trend like that. So instead of you drawing it this way, you went and draw it this way. This way. It's not. No. And before you draw a trend line, the first thing you need to know first is know the direction of the market. So wait, let me use this current price, this price as an example now. See what's happening here. Everybody here can see what's going on in this price. This price is from this side. I'm talking now from this side. I'm talking from this side now, from this side to this side, to this side, this current side. What is happening in this market? This market is actually nosediving. The market is going down. So according to the trend line I taught you guys, what do you have to do? Draw two. So you all agree with me that this place is a point, actually. So just draw your trend line from that point, from here, draw it. So you see this point here, this is not a point, this point is invalid. This is not a point, this point is invalid, though it was obeyed at the third year, which was this one. Yeah, so you can see 4 seconds, it was obeyed here, but was broken out here. So until this price break this area here, this price push above this area. What's it called now? Okay, use this. Push above this area. I can still adjust my trend line to be this side, to be this side. Yes, because it is still under the jurisdiction of this trend, actually. Do you guys get that? So that's until it fulfill the impulse movement of closing the trend line at least 50%. So let's just leave that. We'll explain in our coming class, that's when we'll be going deeply into our technical analysis. So a lot of people made a lot of mistakes, and the more you draw them, the more better you become actually. So because you've made mistakes, that doesn't mean you should give up in drawing your trend line. This is actually a trend line again. Can you see the way I'm connecting them? Sorry. This is a trend line. Can you see? 2 points. This is the first 2 points. Then draw it out into the future. You will see when prices are coming back, they will be reacting. This is what happened here. See this reaction here, this reaction here, this reaction here, this is another reaction here. Just draw it into the future and see its reaction. That is an uptrend. This is a downtrend. As you can have it, this is a downtrend. This is a downtrend. So please, if you don't understand this concept, watch those videos again and again and again and again and again and again till you get them. So I think that is the correction of those previous classes. Number one, you draw your trend into the future. Number two, you don't just connect 2 points. You connect at least, you don't just connect 2 points. You connect that 2 points and extend it into the future. So that's how to draw a trend line. And when you are drawing a trend line, if it's an uptrend, you draw it from the trough. If it's a downtrend, you draw it from the peak, which means what I mean by the trough is this is an uptrend, this is an uptrend. I draw it from the trough, from the bottom, from the bottom, from the bottom. That's what I mean by the trough. If it is a downtrend, you draw it from the what? From the peak. This is the peak of this market, right? This is the peak of this market here. So that's how you draw a trend line. So that will take us to today's class, actually. So today, everything I've been teaching you guys is like taking one to London, and you're now showing the I said London now. Taking one to United States, and you're actually teaching that, you're actually showing the person, this is New York, this is Los Angeles, these different areas in the US. But you didn't teach the person actually the language spoken in the US, speaking in the US actually. So now, what does that mean? That means though the person can have a lot of knowledge about places, about things, the activities that are happening in that country, but the person wouldn't be able to express himself effectively, because one of the major things you need in a place, in a particular geographical location, in a particular business, is the language of the business itself, the language of that location itself. Same thing as a forex. You actually, this forex of a thing, you'll be seeing, actually, it is not like this. It is not like this. These things you are seeing is just to give us, should I say, a better understanding of what's happening in the market. The normal way the market should be is in form of this, line chart. But one thing is this, one thing about this market is this is a line chart. We can't understand what's actually going on within time spaces in the market. What I mean by time spaces is, okay, for example, in 1 minute, what actually happened between 1 minute in the market? Maybe sellers are more dominant in the market, or buyers are more dominant in the market. Nobody's having the idea. So someone came in and created a kind of chart for us that can help us to identify what actually happened in a particular time. So that will lead us to today's class. And please, I want you to pay a real attention on what I'll be teaching you guys today, because this is actually the basics and the most essential knowledge you should have concerning forex market. So let's go to today's class and let's see. I shared the book with you guys. I shared a book with you. I was saying, sorry, let me see if I can. Okay, beautiful. So okay. I shared a book with you guys. Sorry now. So I shared a book with you guys concerning this. I shared this book. I share Candlestick Trading Bible to you. So as a Christian, you need a Bible to work with God. As a Muslim, you need a Quran to work with God. As a Buddhist, I don't know the book you guys use now, but you need books. They call them holy books to work with whatever entity you're serving. As a forex trader, you also need a Bible, a book, to also show you the relationship between, how to connect the relationship between you and the market. So the Bible is just like what brings connection, understanding between two entities. You understand? So me as a low being and God as a high being, I really need to understand God. God already understands me, but I'm the one needing to understand him. So for me to know him, I know him through the word, which is the Bible, Quran. Allah is a supreme God. He knows everything about you, but you are lacking knowledge about Allah. So you are lacking knowledge about things that that pleases him and things that he hates, something like that. So the Quran allow you the space, allow you to have the knowledge of understanding what Allah wants and what Allah don't want. Same thing as the candlestick trading Bible. The candlestick trading Bible is to reveal to us the movements and the, should I say, the activities of the market, what the market is actually saying. So automatically, having this background that normally forex market is actually a line chart that no one understands what's actually happening. It is true. You can draw trends with a line chart, but you actually need to understand some stuff that actually happening in the trends before you draw them. I will later go back to that. I think maybe later this week, we want to talk about line chart. But please, just stay focused on this. So this candlestick, it's actually a Japanese way of trading. It's formed by this Japanese man, Muenas Oman. So this man is a rice trader. Actually, he is a rice trader. So there's this funny thing about this man. When other people are losing, this man is getting money. When other people are getting money, he's getting more money. Simply because he actually created a system that is having more edge than other traders. So this candlestick is actually referred to the Japanese till later in the late 1990s that the American traders start to get candlesticks. So I will tell you. So what I'm about to tell you now is the secret of candlesticks. How you can actually use candlesticks to trade. So let's just move. There are a lot of things in this book that I will even love you to read yourself. Well, so I'll be reading and explaining at the same time. So please pay a full attention to what I'll be doing. So a candlestick trading Bible is one of the most powerful trading systems in history. It was invented by Oman Menisa, the father of candlestick chart pattern. This trader is considered to be the most successful trader in history. He is known as the god of market in these days. His discovery made him more than $10 billion in today's dollar. So this is what I was telling you, that this man is very, very successful simply because he really understands a secret, which is his own chart, a candlestick chart pattern, in which he invented himself. So this gave him a lot of edge in the market. I've spent that. This is the person that wrote this book now. He has spent 10 years compiling, testing, organizing, and consistently updating this method to create his own new version, which is considered to be the easiest and the most profitable trading system. Candlestick Trading Bible is the trading method that is going to finally take your trading to where it should be: consistent, profitable, easy, and require very little time and effort. So please pay full attention to this. This trading system is based on Japanese candlestick pattern in combination with technical analysis. So the trend line I taught you earlier, and this is what we will actually be using in our trading. All what you have to do is spend as much time as you can to master the method that I'm going to share with you, using it to trade any financial market. So maybe it is crypto, maybe it is melters, maybe it is what's it called now, forex market, the currency market, maybe it's even rice market, commodities market, even stocks. You can trade it with candlestick. Learning Japanese candlestick is like learning a new language. That was what I was telling you. Imagine you got a book written in a foreign language. You look at it, you look at the pages, and you get nothing from what is written. That is the reason why when you look at your chart, you might sometimes, what's the meaning of this blue and red thing? Why is it going up? Why is it going down? That is what you're about to experience here now. So the same thing when it comes to financial market. If you don't know how to read Japanese candlesticks, you will never be able to trade the market. Yeah, that is very, very true. So let's just move. Candlesticks are the language of Japanese candlesticks are the language of financial market. If you get the skill of reading charts, you will understand what the market is telling you, and you will be able to make the right decision at the right time. So what this thing is just trying to tell you, let me just go back. Let me go into the future and just bring some stuff I will be telling you. Actually, this Japanese candlestick is actually telling you what traders are actually doing at a specific time. So maybe, for example, now a market has been selling. There have been a lot of sellers in the market, which means GBP USD. We'll be having a lot of sellers, which means a lot of people are selling GBP to buy USD. So the market has been dropping. You'll be seeing a lot of reddish candle, depending on the color of your chart. You'll be seeing a lot of reddish candle and a lot of things that have been dropping, dropping. So this candlestick, when buyers start coming in, you just see some sort of reaction between those candlesticks that we identify, that will give you a clinch that buyers are now coming into this market. Please, I don't need you to get that now, but you'll be getting that as we proceed. So let's move. So you can read everything here yourself. Let me go to where the main deal is. So, okay, this is the history. Please take time and read this book. I personally, I have the I said hard copy of this book, like it has everything here. I printed it. So please read this book. This is the first book I read when I was about trading. I was starting to trade. So, the first time I started. So this was the first book I was, advised to read. So, and I read everything. So please, you can do that too. If you want to be profitable, please read that. So, what is a candlestick? Japanese candlestick are formed using the open, high, low, and close of a chosen time frame. So what this thing tries to tell you is this. Okay. I pray you understand what I'm about to explain now. So it is very simple. If you notice, I talked about time frame when I was explaining to you the anatomy of MetaTrader. I said we have 1 minute time frame, we have 5 minutes, we have 15 minutes, we have 30 minutes, we have 1 hour, we have 2 hours, we have 4 hours. In fact, we have a lot of time. We have a lot of time frame in the market. In fact, up to seconds. So what is this time frame trying to tell you? That means each candlestick formed in each time frame actually shows the activities of traders in that specific time. What I'm trying to say is this. A candlestick at M1, minute 1, the reactions within that candlestick shows the reactions of traders within the time frame of 1 minute. So now, within 5 minutes time frame, a candlestick in 5 minute time frame also shows the reactions of traders within the time frame of 1 or 5 minutes, which means the reaction of 5 candlesticks in 1 minute will be entailed in just 1 candlestick in 5 minutes. The reaction of 5 candlesticks in 1 minute will be combined into a single candlestick in 5 minutes. The reaction of 3 candlesticks in 5 minutes will be compressed and contained in 1 candlestick in 15 minutes. So please, just like that, that's how it goes. You know that calculation. So which means 15 minutes, 2 candlesticks in 15 minutes. The reaction of 2 candlesticks in 15 minutes, a single candlestick in 30 minutes will show you what actually happened. So you can see when you're going to when you're trying to go from a higher time frame to a lower time frame, you will see that maybe you just highlight a single candlestick. Maybe in monthly time frame, you highlight just a single candlestick. You will notice that if you get to daily, that single candlestick that you just highlight will form if you get to weekly, we form like 4 candlesticks. If you highlight those 4 candlesticks, if you get to daily, you see that 4 candlestick is actually like 30 candlesticks. Please, do you get that? It's actually 30 candlesticks. That 30 candlesticks, if you highlight them and go to 4 hours, you will see it is hundreds of candlesticks. So that is how it goes. So now we are now trying to case study just whatever time frame we find ourselves, how to just study candlesticks and understand what has actually happened or what is going to happen in the market. So notice we have 2 types of candlesticks according to the settings I gave to you guys. We have the green candlestick and the black and the red candlestick. So this white candlestick, please listen to this now. That's why you don't have to skip any part of this video. This white candlestick, denote this white candlestick as a green candlestick, and denote this black candlestick as a red candlestick. Please. So that which means this candlestick is a green candlestick, the white candlestick is a green candlestick, and the black candlestick is the red candlestick. So what does this mean? You will see this high, you see this close, you see this open, you see this low. Whatever I explain here, I'll be taking you back to the chart to show you what it actually means. So simple. Which means for a green candlestick, when this candlestick is forming, maybe probably the previous candlestick has finished its duration, which will last for maybe, I'm talking about 1 minute time frame now, or oh, let's choose 5 minutes. Maybe the previous candlestick was just 5 minutes and it has ended. So that means after the end of each 5 minutes, a new candlestick will form. So this is the open of this candlestick, which means at this point, please notice what I'm about to explain. At this open point, it means at a time, sellers came into this market at this open and pushed the market low to this place, which is marked the low, to this point, which is marked the low, and later push this market I and got to this high, and sellers push the market back to this point, and the market close here. So this is where the trick comes in. This is the open price. Where you see the red open, this open place, this is the open price. Whenever price move below the open price and come down, the candlestick will turn red, because it's trying to show us that this candlestick is not gaining momentum. It is not buying. It is not, should I say, it is not gaining more momentum in price. Rather, the market is actually reducing in price. So which means from this open downward here, there's a decrease in price, which means red. Just as when your battery percent, the battery of your phone, when it's low, you know, it shifts to red. And when it's full, it shifts to green. So from that open point downward here, this candlestick will turn to what? Will turn to red. But once this candlestick pushed up to this side, to the open price, and pushed up above that open price, the candlestick will be green. So the simple explanation of what I just said is this: once a candlestick is being formed and it's formed at a specific price, if the candlestick go below that open price, the candlestick color will change to red. When it go above that open price, the candlestick will change to green. So this is the difference between the bullish and the bearish candle. The bullish candle is the green candle and the bearish candle is the red candle. Just get that. You don't really need to understand those terminology. Just understand what the market is telling you. So now, what is now the meaning of this tail, this shadow? This shadow is trying to tell us the footprint of traders. He's trying to show us the footprint of traders. So when someone show me this candlestick now, what am I seeing? Which means, like, at sometimes when this price opened here, sellers came in and pushed the price of this market to this level. And later, they pushed the price of this market above this level. So to show me that sometimes ago, there are sellers in this market and they push the price of this currency, of this candlestick, below the open price before. So the candlestick show us a shadow that, don't forget, sometimes ago, there were sellers in this market. So now the market start pushing up and it got to this point of the high, and sellers came in again and pushed the market low again to this point. So let me interpret this candlestick to you now. From the open price now, sellers came in into, I'm explaining the bullish, the green candle now. Sellers came into this market, they pushed the market low from the open price to the low, and which is forming the red. And later, buyers came in the market and pushed the market from that low to the open price again, which means this tail is trying to show me the reactions of sellers in the market previously before. So after now, the price now start pushing above the open price, up, and up, to the higher part of the candlestick. So getting to the higher part of the candlestick, sellers came in again. They pushed the market again. So the market now closed above the open price. This made this candle a bullish candle. That is that on bullish candle. Please, if you don't understand this concept again, what I've said, back it again, listen to it again, and understand. Moving to the red which is the bearish candlestick now, is just the opposite of what I've explained in the bullish candlestick, which means the price opened again at this price, at this point. But sellers came in, probably buyers came in first. They pushed this market up to this side, and sellers came in again. They pushed the market down again to this open price again, which means this shadow, which is this like something like tail or like thread, shows that at some times before, there are sellers, there are buyers in this market, but the sellers came in and pushed the market lower. So push the market lower than the open price. So the market automatically will turn red, so or turn black, whatever color you set your candlesticks to be. So they turn black and they start moving down, start moving down, start moving down, start moving down, start moving down to this point of the low. So once the market gets to this low, buyers came in again. They pushed this market up from this low, showing us that at some times in history, price has already been at this low level before, but buyers came in and pushed the market upward. Please, do you guys understand this? So now the price now closed below the open. This makes this candlestick a what? A bearish candlestick, which means a red candlestick or a black or a blue, whatever color you set your candlesticks to be. So what I've explained now, I'll be taking you guys to charts and explaining it. Okay, let's go. Let's go. Where's my Chrome now? Share. Okay, good. Sorry. So, okay. So then let's move. Let me try and get something done for you guys so you can see. Okay. So let me just zoom to one candlestick and here you see. Okay, beautiful. I've seen one candlestick I've seen a candlestick that is very, very beautiful. See these two candlesticks here. This is a bearish candlestick, this one here, and this is a bearish and a bullish candlestick. See them here. So what happened? Sorry. What happened here? What actually happened here? This is a simple thing that happened here. So which means, okay, sorry, let me use this one. Let me use this one. So you will see like this last candlestick here, you will see that this is a bearish candlestick. It is red, right? Which means the open price of this market is actually here. The open price of this market is here. Sorry, let me use this guy. The open price of this candlestick, sorry, let me use this guy. Let me use this guy now, okay? The open price of this candlestick is here, is at this point. This point. Let me see if I can just do something. I'll make it more big and aha, beautiful. So I love this. You see the open candlestick, the open of this candlestick is here, right? So which means at this point, buyers came in, they pushed this market a little bit upward, and sellers came in, they dropped the market down, and this market it's pushed below that open price and pushed down and down and down up to this level, and the market closed here at this point. Do you get that? Which means the open of that candlestick is there and the close of that candlestick is here. So which simply means the next candlestick that is going to form we start its opening from this point of close of this candlestick, which is this one. See, you see, the next candlestick that's got itself open, start is open from this point. Can you see? So this is the opening of this candlestick, which means here it simply means like at first buyers came in, they pushed the market up, then they pushed the market down. So let's move. So down, the sellers, they pushed the market down to this side, and buyers came in, they pushed the market up, and the market stopped, and the market closed here. Which means the close of this market is what? Is here, right? So now this shadow is trying to tell us what has actually happened before in the market, that at some point in time, buyers came in, they pushed this market up, but sellers' power overcome the buyer's zones. So they push this market down below the open price, and down it go. So let me now look for, so beautiful. This is what I'm looking for now. So you see, this market closed here. The open of the next candlestick was where? Was at the close of the previous candlestick, which is here. So now, at this point, it revealed to us that a little bit of buyers come into this market, but sellers came in and they pushed this market. And they pushed this market, they pushed this market low up to this point. But what happened? Buyers came in and they dragged this market up. They drag it up. So which means that means buyers start to gain momentum in this market. So now, as you can see now, the market closed itself here. Notice what I've been explaining. Every explanation I've been giving since has been showing that the market has been pushing below the open price. But see what happened next is that, see what happened here. Believe me, a new candlestick will start its forming from the close of previous candlestick. See what happened here at this candlestick. See what happened. The market at the close of this candlestick, the market, the second candlestick started here. But what happened here? Buyers came into this market from this point. Sorry, I want to adjust something. From this point, and they start pushing the market upward. Buyers are now in this market. They start buying this market. See, they not start buying it. They start buying it. But what happened here? Sellers came in again. They drove the market downward. So the market closed at this price. At this price. So leading us to the second, to this third candlestick, which means the open of this candlestick is where? Is here at this point. So brief explanation of what happened here is that the candlestick got open here. The candlestick got open here. Buyers came in, they drove the market upward. Sellers came in, they drove the market downward, leaving us a shadow of what the market has been doing before. Like the market has already pushed up before, and now it's now coming down to this level. And what happened again? Buyers came in and pushed this market upward within the time frame of just 15 minutes. This candlestick is just a combination of what has happened within the time frame of just 15 minutes. Do you get what I'm trying to tell you now? So now this candle closed here. So like that. That is what has been happening. Look at the scenario that happened here. Look at what happened here. The market closed at this point. You already understand what I mean now. The market closed at this point. A new market got open. Sorry, I'm finding my stuff now. So a new market got open here. And you can see buyers came in, they drove the market up. Sellers came in, they drove the market down to this level. The buyers came in, they drove the market up again. Then they closed the market here. Another new price open like that. So if you can interpret this thing, you are already starting to understand the language of Forex market. And in fact, any market at all you set your eyes on in this world, you'll be able to analyze them. Briefly just looking at the chart. Then if you now understand this, so I'll be giving you guys a simple assignment for you guys to do for me. What you guys will do for me is this. You guys will screenshot your chart. We screenshot just 2 candlesticks. You will screenshot a red and a blue candlestick. Something like this one, something like this. Sorry. Just screenshot something like this for me. I mean, like, just screenshot something as small as this for me. Like, zoom in. Is this zoom in or zoom out now? Zoom in your market. See the price very well. Whatever time frame you are using now, I don't care. I'll still teach you how to analyze through time frame. Just, you can write in the words. You can write you can use a voice note. You can use anything. Please, I'm giving you this as an assignment. Please do this. If you really want to survive in this market, please, this assignment, this is not trend line. Please understand this. If this is what you understand in my class, your 2000 is fulfilled. I'm telling you, you can go and learn anything elsewhere. But this, please understand this very well. So just screenshot your chart and explain to me just 2 candlesticks. You can highlight them using your, this is your status marker on your WhatsApp. Just highlight them using arrows, or maybe circling them, whatever you just want to do, or you feel like doing. So just explain to me this candlestick, what happened here. For example, now if I'll be saying in a voice note, if I'm analyzing this candlestick here, this one at the middle here, I will say at the open of this price, the buyers pushed the market up a bit, showing us the shadow of that candlestick, and sellers came in and pushed the price below the open price and pushed the market downward, and buyers came in again and pushed the market and closed below the open price. That is the reason why we have this candlestick as red. So I will still be explaining a combination of candlestick, in which will be like candlestick patterns that we trade. But regardless that now, so just do that for me. Explain at least 2 in a voice note. I will love it. In fact, I will love it in a voice note, because you express yourself better when you speak in voice. Please use it as a voice note. Send it to me in the group. Please, I hope you guys understand this class. If you don't understand this class, please ask your question in the group. I believe I will. It's not I believe. I will answer you. Okay. So please, you guys should have a very nice time yourself. If the attendance for us to still have class, maybe probably today, or I have a recorded session and send to you again, something like this. So please, you guys should have a wonderful time. I believe you understand this class and this session. Please keep reading the book I sent to you. Read it. I'm begging you, read the book. Whoa. Okay, now you guys should have a nice time.